Alrighty. Good morning, good morning, good morning, Doc from North America. And good afternoon and evenings for some. Here we go again. Let's see, what do we got? We had a nice little sell-off across the world yesterday, and nothing major as far as I'm concerned, just hotter than usual. You normally get 300-400 points, 500, but yesterday Dow Jones Industrial Average dropped about 1,100. Makes sense to me. I mean, inflation is here. Earnings are running really hot and successful, so that's kind of like the old saying, buy on the rumor, sell on the news, and the news is that the earnings are so high that will they be high that next quarter? And that's really the question right there. So hello, Robin, and hello, Dukascopy, and hello, Fire. I like that, Fire. So at this point in time, what it really comes down to is, what'd you say, Robin, that they blocked you? Basically we're seeing here is you can see the Swiss this morning moving down, selling some dollar finally. Dollar's been cruising along at all-time highs. And let's see, let's get rid of that. And get rid of that. There we are. And at the same time, you can see over in Chicago Quant, same situation on that chart. Just as on J4X, you see the pressure coming down. We've been in a daily sell now 3 days. You can see that right there. 3 red dots. You can see 3 green hinky ashkies. And the green line is below the 0 line. So, that's what it really comes down to. Nothing more than that. Let's see. What can we say about anything more than that? I guess that's, where it's at, is that the currencies are starting to back off. The stock indices are starting to drop, or are dropping, and we've been in a weekly sell now for the S&P 500 and the Tech 100 and the Dow for over 5 weeks now. So I mean, this is not something surprising any of us here that follow the webinar. They know that we've been bearish on this market for 5 whole weeks at least. And not counting the daily sales that keep on pushing it in before that. So we know that there's pressure on the market. We've seen also the interest rates rise up into the 30-year bond went up to 3.26, that type of thing. And again, our math was catching that comfortably, and we were very aware of it. We've been talking about it, looking at some of the other countries in the world that had bonds that are actually starting to pay interest, which is pretty cool. I mean, it's kind of confusing when bonds don't pay interest. And then, at the same time, we see the currencies themselves. Everybody had gone up like a rocket shot. I mean, look at that! What an explosion! So, I mean, they should back off. Look at that on the J4X. I guess at this point in time, our math is working fine. Trying to understand what it all means is the bigger question. Let's see. Label Buonasera. Yes. Well, thank you, and hello to you too. We do follow the ETF from Brazil, so we can give you a little flavor of some of the things down in that neighborhood. Overall, though, the whole world is just kind of it's a quantitative easing world. So central banks will do what they do. They'll let them drop. Some money will pull out. They'll buy less, but not necessarily stop buying at all. You know that the central banks are going to keep on buying on some level or another because they just print money. I was just reading, so there's a article out this morning about currency and money and how a lot of people don't understand money in general. I mean, the currencies themselves, and they're saying basically that gold hasn't really gone anywhere. They're saying basically, and I agree. I'm still astonished that gold never went to say 5,000, or 10,000. I do understand. I just don't accept it. That's what it comes down to. I understand it. Quantitative easing, the control by the central banks, they made sure that it didn't go there. They stopped it. And so, when you have the ability to generate as much money as you want, and there is no limit, basically, or let's say the limit is so beyond anybody else, they can hold down different products and make them not go anywhere. And that's what we've seen. and that's what we've been seeing. And I've been reading this article. It says that we must remember that every paper currency in history has gone down with no exception. The current monetary system is currently taking its last breaths. I'm not so sure about that. The Fed was founded in 1913 and 98% since. It's a gold window in 1971. It guaranteed that the remaining 1.2% will be lost in the next few years. I don't, so in a modern era with communications and connections and instant information, paper has some value, just like cryptos have value, like gold has some value. And, so we're seeing right now this massive explosion, obviously with some type of mechanical connection to inflation. So they had to readjust. I guess there must be a buying power thing. In other words, the Federal Reserve and the central banks across the planet must have, like if you can purchase this for that over inflation, most funds always have that incorporated in there. So this explosion up, the way we've seen it in every one of these products, we'll show you the yen was the same way. Just a massive push. Right there, you can see the same thing. Just a massive push. And let's see, where else can we throw it? Even we're seeing it in the Turkish Lira now, and more than usual from ever since they started giving away free puts. But I mean, all the products did it. You can see that the euro, and the cable. Here's the cable. Did it just in reverse, because just the way it's a cable, or it's a British pound against the dollar versus dollar against the British pound. It would be the same way on that, and same thing with the euro. So this wild push on the currencies these last 5 weeks, 6 weeks, has been mainly due to the inflation. Accepting the fact that it's here, and then what are we going to do about it? So, we'll go back to the Swiss there and just finish it off, and then we'll go look around unless someone wants to see a particular product. Let's see, Buna Zia, Avaram. Oral Varam. Hi, how you doing? I'm trying to just do my best to say hello and enunciate at best the people saying hi, because I like to say hi too. So from there, let's go over to the Swiss. We'll finish off the Swiss right there, and you can see they're pressing down, and you can see over here we're not pushing through the weekly yet. We're just seeing a daily sell now for 3 days. So it's just basically saying don't be long after 20 some odd days in a buy. And so you can see here, it's pressing down just like it's pressing down here on J4X. And we'll see how weekly goes. If it at least touches the time manifold, it's not even challenging the zero line. Forget about that. I myself think none of this is going to be that aggressive. I mean, how do I describe aggressive? That it's not going to be dire. I don't think it's going to, punch the daylights out of the market, hurt it. In other words, this massive move was phenomenal to watch the dollar go run up. I'm sure they're trying to adjust this whole thing, find another new way. Maybe that's why Bernanke, the one who invented QE, came out. I guess it was Tuesday. Was it Tuesday or Monday? He came out and put an article in the Wall Street Journal, basically saying, the Fed should have tightened sooner. It's like, where were you when you were Fed chairman? You wouldn't tighten at all. So, it's a very odd thing there. Oh, 54, how you doing? Legend Jamie Dimon was booed by his shareholders yesterday in a rare event. I love this guy. I was amazed. Well, Jamie does his best. He's a good salesman, and he's a good chairman. And Jamie does his best to be neutral. I think that's the best way to describe it. He likes to be neutral. So as much as he'll say, it's inflation and Biden and so forth, he'll also say, something else that says something positive about inflation and Biden. And he probably got booed on something like that. I didn't see it yet. It hasn't spilled out. I'm a little surprised. I'll go look for it on YouTube. But yeah, that's Dimon's nature. He likes to be neutral. Matter of fact, I think the mayor of New York City said that he should start riding the subway to show everybody that it's safe. That's not going to happen. It's not safe. But anyway, yeah, that's probably why Jamie got booed. As I'll have to go find the YouTube or hunt it down and see what the question or the statement was. But I'm sure he did one of his usuals, and that was he tried to be neutral. When a lot of people in this country, like 75, you know that Mr. Biden is only polling 25% in some areas, not with Republicans or Democrats, but with independents. Nationally, he's polling 25% with them, but in some areas, he's polling really low. I mean, so low that anytime you now say, like, well, you can't blame Biden all of it. If you dare to say something like that, 75% of the people are going to go nuts. They're going to be very unhappy. And we know Jamie likes to be neutral. So you put those two things together, that doesn't surprise me that he got booed. But I'm sure, we'll see what's going on. Maybe they got, overall, he's guided that corporation very well. He's got Chase Bank, a classic, didn't get caught in the the collateralized debt obligation bankruptcy of the world back in 2008, which created QE. Lloyd's of London doesn't exist anymore. Merrill Lynch doesn't exist anymore. Deutsche Bank doesn't exist anymore, except for in name. They're owned by their central banks at this point. Citibank, actually, Merrill Lynch is owned by. It was a forced marriage. I think they gave him the stock for $12 or something like that to Bank of America, a bargain of a bargain. But end result is that the collateralized debt obligation bankruptcy of the world, which most people don't even realize that it happened. They've forgotten because the governments have hidden it so well. But most of us do here in the trading room. We know it. We've been talking about it. That's what QE is all about to begin with, and that's probably why Bernanke came out, who created QE back in 2008. It was part of his graduate degree thesis. So he'd been working on that one for 40 years. Anyhow, that's where we are. Now let's jump over to the euro. And as you can see here, the euro, same situation. Look at that. It's just been in a weekly sell for so long. We're trying to get up into the buy. 3 days in a buy here too. So in other words, they're selling dollars. And but we're not really seeing any real change yet. Just maybe it's a dead cat bounce, or basically reverse head and shoulders that might develop here. It'll run up a little bit more and then roll down a little bit, support this area, and then I guess we'll see what the news is. It's summertime. Remember, sell in May and go away. So, in the electronic age, it's a little tougher to do, because you pick up your phone and you got a source of information instantly showing you everything on the planet, from your local stock that you're worried about to the interest rates or the news or so forth. So it's awful hard to walk away, but people try. We will, is that what that is, the 107 area? What is that? Yeah, you're right, it is 107 area, yeah. So maybe this is a reverse head and shoulders thing going on. And we'll see. Matter of fact, here it looks even lower, right? So the high is what? Yeah, you're right, 106.42. So I'm sure of that. That should be interesting. If we're in a week, if we would get into a weekly buy for a week and then just roll over again, and then get into a daily sell, that could be a real scrumptious short. It could be a really tasty one. Nice winner there, And we'll see. And we'll watch how the math plays, and usually the math has it figured out about almost 9 out of 10 times it's right. So, it's pretty hard to walk away from that. If it reaches there, I hear you. Well, that would be the option spread too. Go with a binary spread. Buy the call. Buy a put and sell a put lower, that type of thing on a binary strategy, or vice versa. Sell a call and buy the cheaper call up top, that type of thing, about 3 months out in value, and up around the 108, maybe the strike price, sell that and buy like the 110, something like that. sell to parity. Oh, you could do that too. You could sell in the money and buy at the money and take on very low risk at the same time. If it rolls over again and breaks the 103.50, that's going to be real, very easy short with low risk. Give you a lot of staying power, that's for sure. You'll be able to hold on to the position for a while without getting beat up. All right, that was me sipping my tea. And then from there, let's look at the cable this morning. There's the cable. Doing the same thing, even with the monkeypox, which we have monkeypox now reported in Massachusetts. And you can see that weekly sell right there. Just since the 133.32 area, 131 area, basically. 130.90. No, it's, what is that? 130.90. So it's like almost 131. Nothing is really jumping out when it comes to strength. You can see these weeklies staying way underneath this. Not even the zero. There's the zero line right there, but it's hanging out way down below. So let's see what it looks like on J4X. Should look the same way. Yep, what's that? 4 green hankies, just like us here. Matter of fact, we got no dot today, which is kind of interesting. And you can see it's kind of reaching the top end of its range again. Uh-oh. Let's see if they roll over there. And let me think what else we can say about any of that. Those first 3 currencies alone tell us that they're trying to do a little bounce from that nice inflationary explosion. Now I would say, was it Tuesday, Mr. Powell, who is now Fed chair for another 4 years, who got sworn in and voted on, so he's it officially. He made it pretty clear he was going to raise rates until he saw some change in inflation. So that automatically took the bonds down, made everybody feel comfortable. In other words, took the interest rate down, not up. So that meant they were gaining in value. Interest rates were dropping, and so that's a positive. That the fact that the Fed finally is not saying something odd like transitory, or he did come up with another new one. What was the other one he said? He did say something. He had a name for it. I'm trying to think what it was. We talked about it on Tuesday. He had another little buzzword like transitory. I want to stay stabilizing. I don't know. It was something. It was some interesting, odd way of saying it. It's a funny thing. It's like they're wordsmiths now. I think they all learned from Draghi. Everybody remember the European Central Bank chair, Draghi from Italy? He was really good at that. He could talk a market up or down pretty easily without spending any money. That was pretty cool. He was good at it. All right, now let's jump over to, where are we jumping over to now? So we go to, from the cable, we usually jump over to the Turkish Lira. So let's see what the Turkish Lira is doing this morning. We'll look at the dollar Turkish Lira to start off with, right there. And right there, you see that it's been one big march up of late, but you can see it's still trapped inside our range, and hopefully it stays like that. Hate to see it start to take off. It tells us something's wrong with the put, and that's what it comes down to. Something wrong with the put. Ouch, we don't want that to happen. We're so happy with them for the last 6 months. Or 5 months it is now. They started giving out a free put. That's what this big drop is right here. So if you buy the Turkish Lira, you get a free put from the government, which is pretty cool. Yeah, well, I'll show you the Euro Turkish Lira now. That's usually the better one to look at. Right there. And let's put it up there. There we are. It's banging against the top end of the range also. Just not as aggressive, but you can see we have slid into the weekly buy. And see if it closes there tomorrow. Whereas on the dollar Turkish lira, it would never give up. Let's go back and look at that just real quick. But on the dollar Turkish lira right there, it's been in a weekly buy since back in here. And it just would not let go, and still not letting go. A lot of green. It has a lot of green. So remember, traders, if you want to just see a chart on something, just throw it out there. We'll go take a look at it. And then from there, let's see, what else can we say about that? And you can see it here on J4X. It's doing like a double hitch. It's taking off again. Let's hope it starts to peak and roll over. I'd be really disappointed if somehow or another that free put that I think is wonderful falls apart. Hey, it's not going to be the first time I'm wrong. But, I just thought that was a brilliant move, a way of stabilizing their currency, which had been in some real ugly situations now for, 7-8 years. Going from 1 to 18 against the dollar, going from 1 to 21 against the euro. That's a pretty bad thing, it's real disappointing. Another sip of the tea, of course. That is really, just to see a currency, and especially an industrialized country like Turkey, just get crushed because of whatever policies they came up with that just did not match up to economic reality. So people looked at the Turkish lira and said, okay, well, no thank you. And obviously, they just came out again last week. 70% inflation again confirmed in the last quarter. So I kind of think it's topping out. That's what it did. I think it was 70% the previous quarter, or 72%. I think it might have been 75%. I don't know, something like that. It was in the 70s. So at least we're topping out. We're seeing this topping out of the inflation. But it reminded and scared a few, I'm sure, that they're thinking, oh man, they're giving out free put options for every purchaser of Turkish lira. Wow, maybe the currency should be down in the 14s and 13s now, not the, in this case here, you can see the euro against it is 15.85 as we speak. Oh, you know what does it say there? Oh, that's the yeah. No, that's the dollar Turkish lira I'm looking at. Okay, let me get back to the euro Turkish lira. Right there. And you can see it on J4X, 1676, 84 offers. And now it's it's kind of a wide-ish market too. Was that 93 at 60? Yeah, things are getting a little bouncy over there, aren't they? There obviously some uncertainty. When you get this uncertainty thing, that's what happens. You get lots of action like that, and that's usually the way it rolls too. So a brokerage house has to widen their bids and offers to be able to get execution done for everybody, and that is a challenge, because people think, oh, they're trying to rob you. It's like, no, they're trying to fill your order for you, and if they're wide, more than likely someone else is also wide, or they're leaning on a client, one or the other, trying, it's one or the other. So either way, you don't want to be you don't want the fake brokerage house to do that. A legitimate brokerage house will widen their bids and offers, because they don't have a choice. They're trying to fill your order. They're trying to do it for the best price to the market. Decimalization has really hurt the market in many ways. Has taken away a lot of money, removed a lot of money outside of the market, because it's too tight a market to make markets. So market makers are now being forced to do limited amounts of market making, which is not a good thing when you really think about it. Chasing away people from, following the marketplace, really. So now from there, we go over to the Canadian. We look at that next. There it is, dollar CAD. You can see days and days now. 5 full days of red. Starting to do a little bounce here. Let's see how it looks like over here. There it is. Same situation, 5 days of red dots, but the last 2 days, look at that. We've got greens kicking in with it. So they're showing us that there's some volatility coming. Now we're still in the daily sell since here, put that line in there. I thought I put that line in there before. And we're still stuck in the weekly buy. It's not exactly, the blue line is trying to come down a little bit, but that's the ghost of it, I guess you could call it. The real numbers we're watching is the histogram and the green line for the moment. And, it just doesn't, not breaking down enough, It just shows you how much trouble some things are in, And so at this point in time, I would basically think that, first of all, we always look at the, what is it, the oil, isn't it? Yeah, that's it. There it is. There's the oil. That's the S&P 500. But let's show you the oil contract. And it's going down. And normally, when it goes down, the Canadian goes up. That's probably why it's stalling out a little bit there. Let's go back over to it. And that's what that's all. Matter of fact, you can see yesterday, it was up there. Now that they've taken it away from it today and tried to bring it back down to the lows. And we'll see how that trades and plays out. But oil has been going down. We'll just show it to you again. Not there. Right there. Oil's been going down for the last few days. We're in a sell. Matter of fact, our back month is 3 days in a sell. As you can see right there. So it's been pressured right there since the par area was at 101.28. Now we're trading at 95.95. Now this is the same situation. In a weekly buy for 6 full weeks now. So it's been really hard. I don't think they're going to sell it down too much. I think there's just, there's obviously something going on in the sense of they're trying to pressure the oil sector down. I don't think it'll last because we need it. That's what it really comes down to. It is needed. All right, so from the Canadian, let's look at that again. You can see here that pressure and also gold. Normally when gold is going down in value, Canadian also it finds a way to go up, just like oil. But when oil is going down in value, the Canadian goes up, loses money against the dollar. So far, not too much. Now let's take a look at gold real quick. Right there. Now they're trying to lift it today, which is interesting. It's been battling hard here for the last couple of days trying to get into a buy. Now, whereas silver, we'll just show it to you real quick. Silver was doing the same thing. It was trying to go into a sell here today. We can remove that. It's lifting back up too. So they're buying the metals. So gold is going up. Silver is going up. So chances are, where's it at? Chances are, how did I do that? Let's get to the currency again. There it is. We'll see the South African rand coming down, gaining against the dollar, in other words. Where's that at? Right there. There it is. See? Trying to head down today. Nothing major, but it's a start, starting to pressure itself again. Here it is on J4X. There we go. 3 red hinkies. Excuse me. And, you can see the green line heading down. Maybe we'll come back down into the low 15s, 1550, 1540, something like that again. That would be interesting. See that. Right now, what we have not seen is, this is usually South African rand leads, doesn't follow, but leads. So you can see it's been trying to go down for 3 days now. And that would mean that there's some strength hidden out there in the metals complex. So we'll watch that. And I guess stocks going down, maybe money's running towards gold and silver a little bit. It's like a nice place to hide. Matter of fact, Romania, excellent. Avram. Romania, I just saw that. Cool. We got Romanian family here. Let's see. Over on the, so because of this, the South African rand trying to move down. We see the metals complex trying to move up. Interesting. All right. From there, we'll go to the currency that will not be named. And it's actually got a little red dot last time I saw it. Oh, no, we can't get it on there. That's right. Let's see. Let's go stay back. We'll go with leave the smooth. Let's leave the gold up there for the moment. There it is, gold. And then let's see if we can do it right here. There's the currency that will not be named. There's a little red dot going on there, and they're trying to push it into the sell maybe, which is really curious because that's what it's it's been in this buy and gone nowhere but down anyway. It's been locked with the dollar. Look at that. It's the weekly is trying to pierce the weekly sell again. I'm sorry, that's a daily sell. Sorry about that. That's daily sell. The weekly went into a weekly buy last week and has done nothing but just kind of bounce around in a sideways channel. This particular currency now is locked to the dollar. So it's a little surprising. It's locked to what they say gold and oil, minerals, that type of thing. But obviously that's locked to the dollar, so they kind of march together. Now, at this point in time, let's see, what else are we looking at? Let's look at the Japanese yen. And there's the yen. Second day in a sell right there. Oh, no, what is it? It's no, it's still in a sell. That's what it is. We've been in a sell since up in here. So this red and green stopped it from going into the buy. So we've been in the sell for 3, 4, 5, 6, 7 days, but we're in a weekly buy, so it makes it really tough to try to get long this thing. Maybe it'll come and challenge this high here, the 125 area, something like that. We'll see how that plays out. And that is, and I understand Mr. Biden is heading to Japan tomorrow, something like that. So he'll be, who knows what he's going to be doing or who's going to be talking. It's a very strange situation having Biden as president. Another sip of the good old tea. From there, let's see, what else can we say about any of these? And that is that the strength in the dollar has dissipated, and we're seeing all the currencies try to move, with strength against it now. And we'll see how the weeklies change by the end of this week and going into next week. And maybe it means something, maybe it does not. We'll see. I don't have a lot of confidence one way or the other. I'm voting for status quo. So in other words, this big plateauish area will probably become a plateau. Of course, they'll probably go challenge like highs here or this thing here, and then try to lift up again and just zigzag again. And next thing you know, we'll be in June. I mean, that's kind of like the way it plays itself out. All right, now let's show that to you on the Japanese yen right there. See the same game going on. It's just a sloppy world when it comes to the whole marketplace at this point. There's not a lot of logic to a lot of it. In other words, when I say logic, I'm talking about fundamentals. The fundamentals have been really, really removed. We really don't see anything that justifies the action that we've seen, and that's the thing that's kind of strange out of it all. Because without the fundamentals, you don't have much to describe things, I mean, that's pretty much what it comes down to. No fundamentals, no logic, so forth and so on. Indeed, huh? All right, from there we'd run over to the Mexican peso. And there it is right there, Mexican peso. It's sitting around. Yesterday they popped it back up again, thinking we were going to touch the black line. Today they're trying to doing it again, and they're still in that sell from here, and we're in the weekly sell from there. So it's been a nice thing. Now here's a good example of how we used the blue dashed line on here. when you get the green breaking down and the blue breaking down through this zero line, it can really emphasize some real strong selling. Now in this case here, it was already at the 0.23, so it's not exactly that far away from where it was going, to stay inside the range. But they're doing it. They're pressing it down, and that pressure is not letting go. And that's how we use that ghost. Whereas you can see here, we get the strength out of it. But by the time the green line finally joins in, it's the top. And that's what we kind of watch, is that type of action. Same thing, like I guess back over here did the same thing. It goes up, it's inside there for a couple of weeks, and then the green line finally breaks through. We are usually concerned that that's too much of a lag, especially when you go into a daily sell like from here. When you go into a daily sell like that, no thank you. It's like, this thing is going to try to break down. And they did the same thing here too. They whoop, didn't mean to move that. But this is a good example of how we use that blue dashed line at times. There we are. And there we go again. There we go. Alrighty. All right. From there, we're done the currencies. Unless anybody wants to see a particular currency, then we'll come back to it very gladly. But from there, we'll go take a look at the metals complex, and there's silver. And you see, silver had been playing this morning with the sell side of it. Matter of fact, we can show you that. Let's minimize that for a second and open. Where's it at? Right there. Move this over. This is what we sent out this morning, and it's already changed. And that's the way the markets are. They do that thing they like to do. We were flirting with a little sell there this morning. No strength at all. See that? And being in a weekly sell, it was like, ooh, we're going to get into a sell and it's going to go head down. Nope. Look at it now, live. Right there. You can see it right there. This thing is turned up. This thing is at the highs of the last 4 or 5 days. Showing strength. Not like it looked this morning, that's for sure. So silver, like I've been saying of late, I am still astonished that silver isn't sticking above the 24.5, 25 area. It's like as if no inflation, no craziness, no war in Europe, no threat of nuclear war by the former Soviet Union. I mean, it's like none of that means a thing. Fundamentals have been really thrown out the door. No fundamentals. Yeah. That should be the title of this. No fundamentals work anymore. All right. Only quant. No fundamentals don't work, only quant. I mean, that's what it seems to be all the way. All right. From there, I like that title. That sounds like a good title. I think I'm going to stay with that. I'm going to write that down right now just so I don't forget it. So that's a good title. I have to always come up with a title every day for these webinars. So, that's a good one. I should, use that instantly. All right, so now let me just go there and open that up. Nope, not that way, that way. Just one more swipe, and then I'm back. There we go. All right, good. I've got it now. All right, from there we'll take a look at copper, which has been in a sell for a couple of days, which is interesting. And now it's doing the same thing. And we can show you that this morning. It was also, I'm always disappointed a little bit. And if our clients want to see where things are and they're dramatically changed, it's like, no problem. Yeah, you can see that this morning. That's how it looked this morning when we sent it out. And now look at it. It's turning up strong. So if they need a refresher, we're always glad to send them a refresher. And you can see it's leaped across the zero line the whole bit. Red and green giving a signal of volatility. Let's see if they're going to drive it back up into the 40s. And let's see that over on J4X. Right there, copper. Two reds are going to get going soon, just like we are a red and a green. This will start to shift its gears. There we are. You see that green line has been there for a little while now, fighting to tell you not to be short. But the red hinky ashkies have been holding it back. Titus. Hey, Titus, haven't seen you in a while. Hi, no fundamentals, but a lot of central bank action. That's it. That is the truth, isn't it? That is the truth. So the title today, I'm thinking, could be something like "No fundamentals outweighed by quant," something like that. Because the fundamentals are just. Who would? I just have to say it one more time out loud. Who would think that gold could be 20 some odd percent off its all-time highs when we have 40-year high inflation? Same thing with silver. Silver almost 60 some odd percent off its all-time high, and we have 40-year inflation. It's like, wow. It's basically fundamentals. They're just just not there. They're just not the tool that they used to be, and we're all disappointed. At least I am. It'd be nice to have the fundamentals giving us a background story that would make sense. That's really what it comes down to. Indeed, indeed. All right. So from there, let's drift over to. We're going to look at platinum. Platinum was leading us a lot, and you can see here it tried to get into the buy, and it did right there. But we're still in the sell, so you can't take it. Then it goes into a sell. You can take that. They make a new low there. That's pretty cool. And then they shift the gears and look at it now, trying to really take off. If we get this platinum into a buy here, maybe this is the beginning. When they say sell in May and go away, maybe this is the beginning of just a small summer move in the gold. We've seen that happen before, where you get a little summer rally where people just keep on doubting that it could happen, and it happens. That is kind of like it's a weird way, but it is the truth. We've seen that a few times happen. All right. From there, we'll jump over to the energies. There is Brent. You can see that right there, a second day with red pressing down. Over here, we look at the front month oil right there in July. You see second day pressing down. And then we take a look at that back month as we showed you before, and that's 3 days pressing down, not 2 days. But none of them are into the weekly yet. Let's just see what the weekly looks like on Brent. Still green. And so, we've been in a buy in the back month for 6 weeks. This thing here has been trying to press up for 4 or 5, something like that, or 3 at least. There's a 3 right there. And matter of fact, it was green there with that leap through right there. Then it gave you the sell off there, and it didn't change. The line was still above the zero line, so you wouldn't want to get short at that point. And logic would say don't get short oil, but that's what it is. Fundamentals on some level. In this case here, and I'm gonna discuss this a little bit more in depth, and that is that oil has a whole different volatility than other products in general. Okay, and so what do I mean by volatility? It can fluctuate much greater in price. It's nothing for it to go up 5, 6, 7, 8% on a given day, and it have almost no effect on where the trend is for the week or the month. And that is really amazing. It's got its own volatility because it's a product that's being used by everybody all the time. Silver should increase more than gold, according to experts. Yeah, you would think that, because silver's down 60% from all-time highs, and gold is down like 20% from all-time highs, not even, right? All-time highs like 2,200, right? We're trading at 1,800, so that's $400 off of 2,000 would be like 18%, 17%, 16%. So literally 17%, right? So gold is more than almost four times less down. So you would think that it's underpriced. The pairs trade was underpriced. Yeah, that makes total sense, Titus. I agree with you. We'll see. And I would think the same. I would think that they'll drive. You would think that they would drive silver back up to the 24.55 area. Play with that again. That'd be a $3 move, and gold may only run to who knows, like 1900. It may not have as much of an effect strength wise. I agree with you. All right. From there, we go and take a look at nat gas. Here's the U.S. nat gas. It's trying to roll over. And what the double? Let me just refresh that. Something seems a little fishy there. A little fishy. Let's just take a look and see what we sent out. Because I don't see a red line here. Whoop. I don't see a red line there. So let me see what we sent out this morning. We'll double check that. Once in a while we get bad data. There's what we sent out this morning. Where are you again? I just had you in my eyesight. There it is. Yeah, something went wrong here with the data. That's July. Let's move that down. So what did they screw up? Oh, this is it, right there. On the 16th, somehow or another, data just changed on the 16th. Let's try this. Let's try to do a refresh. There it is. Nah, it's not refreshing it either. So let's do this. Let me just go check another chart real quick. Another service I have, just to double check it. And this is what? July natural gas. July natural gas. July natural gas. Where are you? There you are. Yeah, the 16th is wrong there on this chart. And so the high was 8.276. So that might be right. And the low is 7.765. That needs to be fixed. We'll have to work on that, straighten that out. Let's just take a look at it over on J4X. Once in a while that happens. The system just grabs something. I don't know. Somebody plowed data into it, and the system collects it up, saves it, and then we have to go straighten it out, and then it gets straightened out again. That's why we use other services to double check stuff. Let's see, where is nat gas? U.S. nat gas right there. Yeah, you can see it. Where is it? The 16th. I guess the high is 36.91 there on the Hinky ASCII, but remember that's a mathematical configuration. So we'll have to fix that. Lots of green there. Funny what it did to all them. The data is really wrong. All right, and then let's jump over to the European natural gas. And we'll work on straightening out. You know what we're going to do is we're going to leave ours up from this morning. Let's see, right there. And that makes more sense. And you can see it's at, this is the European. No, let's go to European now. See what they're doing with European natural gas. It was in the 27s yesterday. They had been playing with the 26s. Let's see where it's at now. It's still moving up. Yesterday it was like 27.17. It's up from 26.61 or something like that. So they're putting a little more pressure on it again. You can see that pressure moving it up. So that selling that was going on. Matter of fact, where is it at now? I'm looking on the other chart, and we're at 8.24. This one's showing you this morning was 8.06, and this is right. This is right here. So this one's being accurate, and these two. Where's that? These two. See, they don't look anything like these two here that we had this morning. Not sure what did it to it. Like I said, they plowed data into it. Sometimes these black pools, they put data in these things a couple days later so they can hide their trades. It's a new way of doing things the last decade. This way the funds don't have to report what they're doing until like days later. So supposedly it's supposed to hide their actions. I don't, I guess they're threatening to move away from the exchanges if they can't hide their actions. And the exchanges, the last thing they want is to lose business. So they're willing to break the law instead, which is kind of weird. But that is the way it is. Let's see, which one is that? That was nat gas too. We have two nat gases up there. Okay. So I can just get rid of that one. All right. So you can see the natural gas itself, the pressure has been on the upside. We've been in a buy since back in here. And we're in a weekly buy for a long time. Since January, I believe it is. Let me just move over here and we'll take a look at it. No. Yeah, there it is. January 28th. So the pressure on the nat gas has been going and going. And, of course, with the war and so forth going on in Europe, makes total sense. All right. From there, we jump over to the stuff. Oh, you know what I was thinking? I know what I was thinking. When we were looking at gold and silver, I wanted to look at Bitcoin. And I was looking at the South African rand, and I kept on thinking in my head, and then I got lost, and I was talking and forgot it. But let's go take a look at Bitcoin this morning. I wanted to see, because I saw some strength in it this morning, and I thought, they really tried to take it down, and they didn't do too good a job. It's up a little bit by like $500 or $600. You can see it's trying to turn up here. We're just barely minus at this point. But we've been in that weekly sell now since like the $42,000 area. And then they took it down to $25,000. So it's been a real push hard down. And we're just keeping an eye on it and seeing if they'll try to turn this up. In other words, when we talk about, I was talking about that article about the dollar, not the dollar per se, but paper currency versus gold. And I thought, and I threw cryptos out there, and I said cryptos are a legitimate product just like everything else in that arena now with quantitative easing. And so, as long as I'm concerned, as long as there's quantitative easing, there should be cryptos. And so, I'm looking at it there, and I'm thinking, I saw the crypto trying to lift up this morning. I saw it down at 28, and where did it get down to? The low is 28,595. And now the high is 29,620. So it's going up $1,000 from low to high, and we're playing with the top end of the range. And so if silver is going to start get going, and gold is going to start get going, then you would assume that Bitcoin and the cryptos will get going. That's what I was thinking more than anything else. And I wanted to say that back then, but then I got lost on another subject. So that's where my head was at. That matter of fact, if it wasn't for that's why my head was turned towards the fundamentals. It was like, the fundamentals don't make any sense anymore. And maybe that's what that's all about to begin with. Is that's the next thing we start to watch, and that is that does the cryptos join in with the gold and the silver, and that would make sense to me. That's the way I see it. I don't see it any other way. And it's well worth watching because I've been mentioning it here. There's a lot of people that got beat up. They thought you could buy. Was it yesterday? I was talking about the idea that you had the mayor of Miami, the city of Miami in Florida, and the mayor of New York City start taking their pay for like 4 or 5 weeks or 3 weeks or something like that in crypto. So in other words, the guy in Miami started doing it in the $55,000-$60,000 area, and now it's trading at it's gone down to 25,000, trading at 29 now as you speak. It's like, well, the guy's lost 50% of his pay, just because of the idea that it's some form of currency. Oh, what's Yano say? Nah, the BTC as safe haven asset. This is dead. Oh no, I don't think it's a safe haven. It's just like, how could same thing with like silver and gold. How can we be at 40-year highs in inflation and not see gold playing at all-time highs at the same time, or silver near all-time highs? Why isn't silver trading at 35 or 40 versus trading at 21, 22? They're not safe havens. They're just alternatives. That's all they are. Oh no, not at all. It's not related to it. To me, cryptos are just an offset to central banks. That's all it is. It doesn't really have much of a correlation, but you know what? It trades like when you look at gold and you look at silver. Silver's gone down, Bitcoin goes down. I mean, didn't gold? Where's gold? Gold's top. They have a correlation, but it's not the correlation that we all thought it should be. That's for sure. So let's look at gold right here. You look at the gold chart on J4X. Where's it at? Now gold topped out here in. Is that right? Or is it further back? It's further back. Okay, so gold topped out. Oh, I see. Yes. So gold topped out. There's the April. What is that? That is March. That's odd. Where is November? Yeah, so right there. Isn't that November? Yeah, no, that's February. What was it gold? Didn't gold top out? I thought gold topped out in November. The gold go. Something's wrong here. Let's put a weekly in there on J4X. Where's the all-time high? Okay, there it is. That's better. All right, so gold back in August of what is that? 20? 21? What is that? 20, right? That's what, the all-time high? I thought it topped out in November at all-time highs, but either way. And then crypto. Let's go over to Bitcoin. I mean, they both top out relatively near each other at times. Where is it at? Right. So, no. Correlation? No. Safety? No. But you can see the same pattern. I mean, they crushed this poor thing. There's February 28th. And what is that? 21. And then you can see a double top here in the 68,000 area again in November. I could have sworn gold topped out in November too. Let's just go back over to gold real quick. In other words, they all fall apart together. And it's not a safe haven whatsoever. The best way to describe cryptos is measure is best. It's a quantitative, yeah, exactly. But the best way to describe cryptos is it's an opposition to central banks. That's what it really is. Nothing more than that. In general, one should just get daily price changes for 3 instruments and a sheet and use the correlation function to check it. Exactly. And so, in this case here, you're seeing strength today in Bitcoin and you're seeing strength in gold and silver. But when it comes to, cryptos have not fulfilled anything that the crypto experts have claimed they thought it would. Inflation. It's going totally the opposite way. It's not defending against inflation. It's getting crushed by it. It's not, the stock market's getting crushed, and Bitcoin is going down. It's correlated to going down with it. It was supposed to go up against it. Let's see. But one question, if gold goes down, crypto goes down, and stocks goes down, where does the money go? To pay other debts off? In other words, that's how that usually works. Money's being used, it's fungible. So that's what it comes down to. Money is just working, getting out of the way. Oil and gas is holding up. Yeah, matter of fact, was it oil, energies, and what was the other one? I saw 2 things that made total sense. Energies and something else have been winners the last 2 quarters. So, yeah, I agree. Somewhere I read that it is at 2,000 highs. Oh, what's that? The gold? Yeah, that was in here. I'll show it to you. I was mentioning that earlier. Where is it at? Here, I'll show it to you, the article. Right there. It's in Zero Hedge. Gold is cheap. Gold as cheap today as in 1971. And he goes through it, and he's got some charts in here. Major currencies against gold in 1900 and 2020. He's obviously leaning something up against the metals. Throughout history, gold has never and will never become worthless. Right. Okay. Nothing deep here. Annual percentage change in consumer price index. UK inflation. He really takes it apart, comparing all these gross. Nobody owns gold. Oh, that's a good one. So if gold is the best performing asset class in this century, why are only less than 1% of the world financial asset invested in physical gold? Good question. Gold on the cusp of a major move. Cool. Gold went to up to 25 times 1970s and then paused for 20 years as stock markets moved up substantially. Gold then bottomed 99-2000 at 250. Since then, gold has outperformed stocks, most other assets. Wait a minute, I thought he said it was equal to 77. Measured against paper money, gold went up about 8 times since 1999. I'm a little confused what he's talking about here. I wanted to read that article. I didn't get a chance, but I posted it on the side so I could go after. So he says gold as cheap as not. Oh, is he saying basically that it's well worth buying? I guess that's what he's saying. All right, we're going to get out of here. And I totally agree with you, Janos. It's all quantitative at this point. That's where we're stuck, and fundamentals are out the door. All right, traders, happy trails to you. Happy trails to you until we meet again, which will be TGIF tomorrow. Happy trails to you to all our Dukascopy trading friends. All right, traders, have a safe and smart trading day, and we'll look at this stuff again tomorrow. Ta-ta for now. And I think I'll read this article and give you an analysis of this article. I want to understand it more and see what he's comparing it to. Ta-ta for now.